Hi guys, hope everyone is doing well. Welcome to the first video series of trading strategies. Okay, so in this video series, we are going to discover various trading strategies that you can use to make some profits in crypto market, be it leverage, be it spot. The strategy can be used for both the markets. Okay, so I gave it a lot of thought to plan which will be the first strategy to put so that everybody can benefit out of it. Now, the most simplest strategy that I see is support and resistance strategy, but without making you understand how to draw proper support and resistance, so you won't be able to understand what I'm saying. I mean the actual meaning of all these things, because there are various ways to draw support and resistance, but I've come up with a very good way, so I'll teach you that. So today we'll start with a more simplest strategy, and I think every Thursday or Wednesday, I'll see sometime in the week. What we can do is we can start with technical analysis videos. Okay, how to perform technical analysis, and then whatever technical analysis we perform for the week, we'll make a trading strategy on the basis of it. Okay. Having said that, this trading strategy, the most simplest that I could find is RSI, yeah, relative strength index. So I'll be showing you everything how to do and what to do, yeah, including your how to put it on your trading view and what are the rules you need to follow, and how to execute the trade and go about it. Okay guys, so I'll suggest that you watch the video full, because I'll give certain things. If you miss even small part of it, then the strategy won't work. So watch the video properly, understand it properly, and only then follow the strategy. Okay, I'm not a financial advisor, so I'll just tell you what I do or my views about it, and then you can make the best decision for yourself. Okay, it is your money, should be your decision. Yeah, having said that, let's start with the technical meaning of RSI. So if you see, this is Investopedia. Over here you can find all the good understanding of concepts and details and definitions, but these are all technical theoretical part. Okay, this is not important, but because we are speaking about RSI, you need to understand the actual meaning of RSI and how it is calculated. Okay, so that you can build up on it. Anything without basics won't survive for long. Okay, so relative strength index is the definition or the full form of RSI. Now basically it is a momentum indicator. Okay, that is all you need to understand, that it shows you the momentum of the market. Okay, what it does is it measures the speed and the magnitude, okay, of a price action. Yeah, price action change. Okay, so these are the two things, the speed and the magnitude. That means how fast traders are buying an asset when it's coming down, and how fast traders are selling the asset when it's going up. Okay, that is all you need to understand. On the basis of that, we come to overvalued and undervalued region. Okay, or overbought and oversold region, like you can see over here. Okay, so these are the two terms you will see everyone using. Now the general definition says is, because RSI is an oscillator which ranges on a scale of 0 to 100, that is why people have put some taglines on it. That means if the RSI reading is above 70, then it is overbought. Okay, and if it is below 30, then it is oversold. Yeah, so these are the two things you can see here. If it is above 70, it is overbought, and it is oversold when it's below 30. Okay, so RSI provides signals about bullish and bearish price momentum. Now, how to figure out what is bullish and what is bearish price momentum? Yeah, so how RSI is calculated is basically comparing, yeah, because it's relative, no? Relative strength index. Relative means there has to be a baseline, okay, or a reference line from which you can make a strength calculation, okay? That's how it's called relative. Now, how it is relative and what it is relative to, that is what it is describing here, that as a moment indicator, the relative strength index compares strength on days when prices goes up to its strength on days when prices go down. Okay, so that is how you have arrived to this formula, average gain versus average loss, and then you calculate RSI from that. Okay, this all is not important because you will not benefit anything out of it. This is not a maths lesson, so you won't benefit out of it. Yeah, so why is RSI important? First is to predict the price behavior. Second is to validate trends and trend reversal. I think this is the biggest strength of RSI, is to validate an uptrend or a downtrend, and especially when reversal happens. Okay, and it can point to overbought and oversold regions, and give you buy and sell signals. Okay, now there are various ways of trading RSIs. Now I have come up with a lot of ways, but I thought how to make a video which everyone will understand. Now I can give you all the information about RSI in this video, but I think uh, that will not be good on my part, because people who are seeing this video and are new to trading won't understand. So this video has been made with a pure basic regions. Okay, if I have to trade RSI, I trade RSI with a lot of other indicators and understanding the price action, because I have a lot of experience. But if you do not have any experience, that is when the rule comes. Okay, so you have to follow the rule. So I've designed the trading plan for you. You can see here I've designed the trading plan for you. You can take this screenshot, take a printout, and put it on in front of your laptop or wherever you are sitting on your trading desk, and please follow the strategy. Okay, because it is one thing to make the strategy and it is a whole other thing to follow the strategy. Yeah, so you have to develop a psychology for it. Okay, if you do not trade, if you just make a trading plan and you don't have a good psychology for trading, nothing is going to work. Okay, you are going to fail over and over again, because fear and greed is what is going to take over, because you are human by nature. Yeah, so trading means basically you have to shift slowly from being a human to a robot. Okay, that is the most simplest definition of it. You are just a robot, nothing else. If you switch to that as fast as possible, the better you are going to perform. Okay, so having said that, you can just take a screenshot of this whole thing. I'll just keep the screen like this for some time and then post it somewhere. Okay, do not think that you just read it once and then you understand it. Post it somewhere. Okay, so there are two types of divergences which RSI shows. You can see in the bottom, I have drawn here the RSI indicator, and here I have drawn the price action. Now I can use all fancy animations and everything in the video. I have a videographer who can do that. But what's the point of it? Okay, might as well do the drawing for yourself. So you can see I've spent 15 minutes of my time to draw this drawing for you on TradingView. If you do not know, you can draw everything on TradingView. You do not need any other platform. Okay, so you can well, why I have drawn is because it explains everything very simply. Okay, in one go, you do not have to see thousands of divergence charts for this strategy. Only this is enough. Okay, having said that, now what I mean by bullish divergence and what I mean by bearish divergence. So in the bottom you can see here is the RSI indicator, and in the top you can see here is the price action. Okay, so this what you see on top is all price action, and in the bottom whatever you see is RSI. Okay, so this is a theoretical concept, that is why the lines are straight. Okay, now when my price comes down and then goes up, this is the local low it makes, that is why you can see L over here. This means the first low which comes. Okay, if it goes down and comes back below the last low, then we are registering a lower low. Okay, so that is how this was the last low and then I got a lower low. Okay, you can see RSI at the same time. I don't know if you can see my cursor or not. Just give me 1 second. Yeah, so you can see that here the price gave a lower low, but the RSI at the same time gave a higher low. Yeah, you can see low here and then higher low over here. Okay, so this is called as bullish divergence. Yeah, so it is very clear that here price came down, but RSI stayed up. Okay, on the same thing in the bearish divergence is opposite. Okay, when the price puts in a higher high, this was the high, so if the price goes above this point we get a higher high. Okay, price making higher highs, but you can see RSI is making lower highs. Yeah, so the RSI was here before when the price was here, and now after the push came here, the RSI has come down. Okay, so you can see that price is put in a higher high, RSI is putting a lower high. So this is bearish divergence, and if price puts in a lower low and RSI puts in a higher low, this is called bullish divergence. Okay, now this is the theoretical part of it. Now let's go to actual live charts and then see how to implement it. What I have done is I have identified 5 to 6 examples for you because there is not a lot of time that we can give in this video. Okay, someday we can do live trading sessions and I can do this much better for you. But nevertheless, this plan is going to work. Okay. A few things to remember here is the time frame to trade is only 5 minutes. Okay, do not exceed this time frame. Only stay in 5 minutes and take your profits in 5 minutes and enter your trades in 5 minutes. Okay, the average gains expected for per day on spot is 3 to 10%. If you are longing, you cannot short in spot. So and the minimum profit with 10x leverage per day will be 30%. Okay, the win rate or the success rate of this strategy is about 50 to 70% if you only follow RSI and price action. Yeah, and the minimum risk to reward ratio you have to target is 1:2. This is the minimum. Okay, once you have 1:2, you can choose to exit the trade. That means if your stop loss is $50 and your profit is already $100, you can choose to exit the trade. If you do this continuously over a period of time, your portfolio will grow significantly over a period of 1 month. Okay, so this is pure basic strategy for just a beginner trader who doesn't know anything. Okay, now let's go to live charts and see that how to implement all this for you. Now what I've done is I've picked up a range for you. So starting from 1st June. Yeah, first let's see how to put in RSI in your chart. Now I'll just hide this. So all you have to do is go to indicators and write relative strength index. Okay, and then you will see a lot of things cropping up, and you'll see here it is. Yeah, you see the star mark over here. You can just click it and it will save it in your favorites bar over here, and then you can just click it again. Okay, now the RSI will come over here. Now you can see that I have made some changes to my RSI. Why is because there are various reasons to it. Now the video will go long if I start explaining you the reasons, but the basics is that why I have changed my overbought and oversold region. There is a explanation to it. Okay, now let me just make it more legible for you. This is the smooth RSI based moving average. This is also important because you are a beginner trader. Yeah, once you get some experience, then you can choose to not use it. Yeah, so you can see that these are the settings I have on my chart. The upper band of RSI you can use to mark 85 and then 15 and 12. Okay, if you do not understand what I mean is, guys, because you can see that here is the overbought region, that's why it's marked in red, and here is the oversold region, that is why it is marked in green. Okay, so in the same way you have to plot this. So the overbought you have to put as 85, and the lower what I have done is I have defined a zone from 15 to 12. Okay, so you can see the theory says 70 to 30, but I have devised this on the 5 minutes time frame because this is where I see the maximum trades getting hit. Okay, now you can see in the live price action, you can just put the same settings in your RSI or as you see fit. Okay, now you can see the entry was very good here. Price was coming here, gave a lower low. Let me just delete this so you can see better. You can see price, the low was here, and then we got a lower low. Okay, we just zoom it a little bit for you. So you can see low to here, lower low you got over here. And then in the same time, you can see RSI was giving higher lows over here. Okay. So let me just shift this RSI up because it will be much more easier to understand. Yeah, you can see RSI is putting in higher lows. Yeah, last low, new low, and price is putting lower low. Okay, so this is called as bullish divergence. You enter a long trade on the basis of this bullish divergence with stop loss below this. Okay, so to target this trade, you can see over here your stop loss has to be below this, and your entry can be somewhere here. You can average your entry over here. Now, what you can do is, for simpler reasons, what you can do is when the RSI crosses, after putting in this higher low, when it crosses the moving average over here, you see this yellow line. When it crosses the yellow line over here, that should be your entry point. So somewhere over here you enter. And then how to exit completely depends on you and what you want from that trade to materialize. But I have just put in a small thing that unless I see a bearish divergence on top, I do not exit. Okay. Now the only bearish divergence I see is somewhere over here, okay? Or you can, because you can see this is the last low, okay? So now we need to look that when the last high was over here at this point, okay? Now I need to look that when I'm getting the next high, what is the level of my RSI? Yeah. So you can see over here, when I get a higher high, RSI is making a lower high, okay? So this will be my exit point. You can see from here to here, price is making higher highs and RSI is making lower highs. Okay, so this trade I would have exited somewhere over here. Yeah, you can see that this is a 4.45% trade. Okay, in spot, if you take 10x leverage, you get 44.5% over here. Yeah. Now, in the similar cases, let's take one more example. You can see here. Let me just delete this first. You can see here the same thing. Price is making lower low and RSI is making higher lows. Okay. So I enter the trade here and I will exit on the next bearish divergence. Now let's see. There is the next bearish divergence. As you can see that there was no good bearish divergence over here and the market went down. But you see the trade here. This was a 7.85%, meaning a 78% trade if you had taken it just on 10x leverage. So you can do the risk. You can see the risk to reward ratio over here. I do not know if you can see this or not, but you see the risk to reward ratio over here is 7.22. What this means is that whatever is your stop loss, that is your risk, and whatever is your profit is your reward. Okay, so your risk reward divided by the risk gives you the ratio over here. Okay, so if you are willing to lose $100 and you win the trade, then you end up winning 100 into 7.22, which is $722. Yeah, I hope that this simplifies things for you, that what is the meaning of risk to reward. Okay, so you can see that when you get a risk to reward of this high level, you can choose to exit. Yeah, now these are the trades you need to be careful of. That is why I've chosen this trade to show you something, that do not be greedy when you are in a trade. You can see that we entered with the same logic in this trade, but the price did not push that high. You can see all it pushed was 3.39%. Yeah, and you get depending on whatever you put your stop loss, you get a risk to reward of 2 here. Okay, so 1:2 risk to reward. Very good trade. Get out of the trade. Okay, 33% in hardly any time. Okay, you can see you sat in this trade for 3 hours roughly, and you made 33% to your portfolio. So it is a very good trade. Yeah. You can see similar trades here, price making lower lows and RSI making higher highs, and you enter the long trade over here. Yeah. When the RSI crosses the moving average, and then you exit. Yeah, you can see the risk to reward is 4, and with 10x leverage, you would have made 74%. Yeah. Now you can see with the basic only this much, these 3 trades, you have already made 44%, 78%, and 74%. Yeah, so that is coming to almost 200% profit. Yeah, and this is not even hardly from 3rd of Jan till here, 13th of Jan. In 10 days of trading, you have already made more than 200% profit. Okay, and you're just starting as a trader. Okay, now there are various other examples over here. We can take this, but they all have the same logic. Now only one bearish divergence example that I can show you over here is, you can see price is making higher highs and RSI is making lower highs over here. Yeah, then you can enter a short once it comes down below this high, and you can see that this short was a very good trade over here. Yeah, you can see 9.59 risk to reward trade. Okay, so if you take this trade, you would have made if you want to lose $100, you would have made $959. If I just reduce the stop loss to 1.5, this becomes a 12 risk to reward trade. Yeah, you can see this is a zero drawdown trade. You enter over here and you exit over here. Yeah, very good trade. So you take this short and you exit after you get a bullish divergence over here. Okay, so now you have entered the short from here to here, and then you can see that you are getting a bullish divergence which is forming over here. Yeah, you can see price is making lower lows, RSI is making higher highs, and then you enter immediately a long trade over here. which again is giving you 3.98 risk to reward trade and 195%. Okay, so this is a very good strategy, and because this is the first strategy, I have kept it very simple. I have not added anything to this. Yeah, having said that, guys, I hope that you found some benefit out of this video. Don't forget to like, share, and subscribe, and comment. And please comment if you're taking some trades. Please let me know on Twitter or in the comment section that how the trades went. Okay, if the market is falling vigorously, don't break these trades. But if the market is going sideways or is consolidating in ABC formats, then this will be a very good strategy to execute. Yeah, I hope you like the video. Thank you everyone for watching. Have a good day. Take care. Bye bye.